Please, imagine this. You wake up one morning, open your investing app, and see that you've officially made your very first $1,000 in the stock market. For many beginners, this feels impossible, like something only Wall Street professionals or finance gurus can achieve. But here's the truth. Making your first $1,000 doesn't require a finance degree, insider knowledge, or taking crazy risks. It just requires a simple plan, the right tools, and a strategy that anyone can follow, even if you're starting today with just a few $100s. In this video, I'm going to show you the easiest ways to make your first $1,000 in the stock market as a complete beginner. These are proven strategies I've seen work again and again for beginners during my 10 years of investing experience. By the end, you'll not only know what to do, but also how to do it step by step, without falling into the traps that cause most beginners to lose money. So if you've ever felt overwhelmed or unsure where to start, stick with me. This could be the video that changes the way you see investing forever. Before we dive into specific ways to make money, I need to share something that separates the winners in the stock market from the losers, and it's not luck, it's mindset. Most beginners come into the stock market with the wrong approach. They see headlines about someone making a fortune overnight on a meme stock or a penny stock, and they think, that's how I'll make my first $1,000, fast. But here's the harsh reality. 9 out of 10 people who chase quick profits lose money. Why? Because they treat the stock market like a casino. If you want to make money consistently, your foundation has to be built on 3 simple rules. 1. Start small. Don't feel like you need thousands of dollars to get going. Even $100 can grow if used wisely. 2. Think long-term. While I'll share faster ways to grow your account later in this video, your first $1,000 is often made by staying patient and consistent, not by gambling. 3. Protect your downside. In investing, your number 1 rule should be, don't lose money. This means you avoid risky stocks you don't understand and instead focus on safer, proven strategies. Think of it like building a house. If your foundation is weak, no matter how beautiful the design is, the house won't stand. Your mindset is that foundation in investing. Here's the good news. You don't need to be an expert or spend hours staring at charts. What you do need is a beginner-friendly strategy that steadily grows your money and avoids big mistakes. And in just a moment, I'll break down the 3 easiest paths for beginners to make their first $1,000. But first, remember this. Your first $1,000 isn't about speed, it's about learning the system. Once you understand how money grows in the stock market, that first $1,000 is just the beginning. Now that you've got the right mindset, let's get into the fun part. The actual ways you can make your first $1,000 in the stock market. There are hundreds of investing strategies out there, but most are too complicated for beginners or carry way too much risk. So instead of overwhelming you, I'm going to focus on the 3 simplest and most beginner-friendly strategies that anyone can start with, even if you're brand new. 1. Index funds in AMP, ETFs. The safest starting point. If you only remember one thing from this video, let it be this. ETFs are your best friend as a beginner. An ETF, or exchange-traded fund, is like a basket of the top companies. For example, an S&AMP P500 ETF like SPY or VU holds the 500 biggest companies in the US, from Apple to Amazon to Microsoft. Instead of trying to pick one winning stock, you're buying a tiny piece of all of them at once. Why is this powerful? Because historically, the S&AMP P500 has returned around 8 to 10% per year. That means if you consistently invest, you don't have to guess, you just grow with the market. To put it into perspective, if you invested $5,000, you could expect about $500 in profit in just a year with average returns. Stay consistent, and that $1,000 target becomes realistic faster than you think. ETFs are simple, low risk, and hands-off. This is the number 1 strategy I recommend for beginners who want steady gains without stress. 2. Dividend stocks. Get paid while you hold. The second method is dividend investing. This is where you buy shares of companies that literally pay you just for owning their stock. Think of companies like Coca-Cola, Johnson & Johnson, or Procter & Gamble. They've been paying dividends for decades, no matter what's happening in the economy. With dividend stocks, you get paid cash, usually every 3 months, which you can either pocket or reinvest to buy more shares. Here's a quick example. If you invest $3,000 into a stock that pays a 4% dividend, you'll get about $120 a year in cash, plus any growth from the stock price. Reinvest that money, and it compounds, meaning your money grows on top of itself. Over time, this becomes a powerful snowball effect that gets you to your first $1,000 without you lifting a finger. Dividend investing is perfect for beginners who like the idea of passive income, earning money while you sleep. 3. Swing trading and covered calls, faster but riskier. Now, if you're someone who wants to speed things up and you're willing to learn a bit more, then swing trading or covered calls can help. Swing trading means buying a stock when it's undervalued and selling it when it rises a few days or weeks later. For example, if you buy a stock at $50 and it goes up to $60, you just made $10 per share. Do that a few times, and it adds up. Covered calls, on the other hand, are a way to make extra money from stocks you already own. Think of it like renting out your stocks. You get paid rent from other traders, even if your stock doesn't move. Many beginners who learn this strategy make an extra $100 to $200 a month, which means you could hit that first $1,000 in under a year. The catch? These methods take more time and practice. But if you enjoy being more active with your money, they can get you to $1,000 much quicker than passive investing. At this point, you now know 3 clear paths: safe growth with ETFs, steady income with dividends, or faster returns with trading. In the next section, I'll give you a step-by-step action plan so you can actually get started today. Alright, so now you understand the 3 easiest paths to make your first $1,000. But here's the most important part: how do you actually start today? Let's break this down into a clear, beginner-friendly action plan. Step 1. Open a brokerage account. If you don't already have one, this is your first step. Platforms like Fidelity, Vanguard, Charles Schwab, or even Robinhood make it simple. It takes about 10 minutes to set up, and once your account is funded, you're officially ready to invest. Step 2. Start with what you have. Too many beginners wait until they have thousands of dollars saved up before investing. Don't make that mistake. Even $500 can be enough to get started. Remember, your goal isn't to make millions overnight, it's to hit that first $1,000 and learn the system along the way. Step 3. Pick your strategy. If you want the safest, most hands-off option, go with ETFs like SPY, VU, or VTI. If you want steady passive income, add a few dividend stocks. If you want to learn and be more active, set aside a small portion for swing trading or covered calls. Step 4. Dollar cost average. This means investing small amounts regularly, instead of dumping all your money in at once. For example, investing $100 every week smooths out the ups and downs of the market. It takes the emotion out of investing and builds your wealth steadily. Step 5. Track your progress. Use an app or even a simple spreadsheet to watch your portfolio grow. Tracking not only keeps you motivated, but it also teaches you how money compounds over time. That first $100 in gains turns into $500, then $1,000, faster than you expect. Before we close, I need to warn you about the biggest traps that cause beginners to lose money. If you avoid these, you're already ahead of most new investors. 1. Chasing hype stocks. When you see a stock trending on social media, it's usually already too late. Avoid the temptation to gamble. 2. Selling too early. Many beginners panic when the market dips. But dips are normal. If you hold strong companies or ETFs, time is on your side. 3. Putting all your money in one stock. Diversify. If one company fails, you don't lose everything. 4. Thinking short term. Remember, the stock market rewards patience. Focus on building habits, not overnight wins. So, let's conclude with this. If you want to make your first $1,000 in the stock market as a beginner, keep it simple. Start with a brokerage account. Choose one of the 3 beginner-friendly paths: ETFs, dividends, or trading. Stay consistent, avoid the common mistakes, and let your money grow. Your first $1,000 is about more than just the money. It's about proving to yourself that you can succeed in the stock market. Once you hit that milestone, you'll have the knowledge and confidence to keep going. Whether your goal is $10,000, $100,000, or even financial freedom. If this video helped you, make sure to hit the like button, subscribe, and share it with someone who's just starting their investing journey. And let me know in the comments, which of these 3 strategies are you going to try first? Remember, your future wealth starts with the steps you take today. Don't wait. Start building it now.